Hey, Cole, welcome to the finance update. Good to have you back. It's been a while.
This is our Christmas edition, isn't
Christmas edition. Yeah. Starting
it?
shop next week or working through? Probably working through, no doubt.
I am working through this year, so I'll be working probably a little bit from home and then a little bit from the office. But yeah, looking forward to it. Hopefully the weather clears up.
Yeah, it's going to be a scorcher or just wet, I think, based on what we've been experiencing. But good to have you back, and it's probably a good time to wrap up the year, where we've been, what you've seen in the market this year, and also your sort of outlook for next year. I mean, you're on the ground floor dealing with people, handing out loans. You're fairly large scale now as well. So let's jump into that. And first, we can start off by the decision that the RBA made yesterday to keep that cash rate on hold.
Yeah, look, they have. They kept the cash rate on hold, which has now been on hold now since November last year. So still at 4.35%. But we are hearing talks through the different economists from the banks that we are going to start seeing some rate relief next year. Depending on who you follow, they're talking anywhere from sort of March, April through to around mid-year for the first rate cut, and then you'll see maybe one or two towards the back end of the year. So personally, I think we'll get one around March, April. That's what I'm sort of suggesting or indicating, and then we'll see how many follow after that. But definitely one by around mid-year anyhow.
Interesting. And I have read the predictions and the forecasts. I know there was one, I think it might have been ANZ, suggesting a December rate cut, which obviously hasn't happened. A few months ago, I was thinking that might happen just to stimulate some retail spending. But it seems like the spending's still there and the economy's still, buoyant enough. And certainly my experience in property sales, yes, buyers are showing more caution, but there's still strong results coming through for property owners that are selling.
Oh, 100%. Look, there is. And look, we're still seeing on the ground here too, in terms of customers that are getting pre-approvals and then going to the market and buying a property relatively quickly, where a couple of years ago, post-COVID, customers were one of a dozen, at the front door trying to put an offer in on a property. So I think the sort of supply-demand chain has changed a little bit, but there's definitely still people that are buying. There's a lot of motivation there, and there's a lot of customers that we're talking to that are gearing up for next year as well, including investors actually, which are starting to come back into the conversation towards the end of this year.
Have you noticed a percentage increase or figures that you could give us on the amount of investors that you're dealing with now?
Yeah, look, we're dealing with about 35% investors at the moment. So that was down from 20% towards the start of this year. So, and the other surprising thing is, as well, as first home buyers are still in the market. They take up around 25% at the moment as well. So of all new inquiries. So there's definitely a good mix of investors and first home buyers that we're talking to, and then the balance is people that are refinancing or secondary buyers where they've sold to downsize or upsize.
Yeah, okay, excellent. Good breakdown. So is the Sunshine Coast in a bit of a pocket or a bubble where we're a bit protected from what could happen? Like, we're seeing the market start to slow in Sydney and Melbourne, where we're actually seeing some negative growth as well. Up here on the sunny coast, year on year, it's probably up about 10%, give or take, depending on the areas.
Yep.
Do you feel that the supply here being limited is positive for future growth for the Sunshine Coast over the next few years?
Oh, look, absolutely. I mean, you've only got to have a look at the two master plan communities here in the coast, which is the Stockland Aura, and then you've got Harmony, which is the Avid Property Group. The fact that there's national developers that are spending a lot of money, like billions of dollars here in the Sunshine Coast, plus there's other infrastructure that's going in as well. I'm hearing the airport's getting a new terminal soon to really open up that international pathway or corridor through to Asia. So, once that starts to happen, obviously, I recently read that the council's changed some of the height of buildings coming into the Olympics as well. So whether that's a good thing or a bad thing, but there's definitely more encouraged talk at the moment around developing the Sunshine Coast going forward over the next 10 years. So I think it's very exciting, and I think you'll see, obviously, on the back of that, some momentum with property prices. Yeah,
absolutely. Particularly if they bring down that cash rate early next year. Now, you're saying you're dealing with 25% first home buyers, 35% investors. Are you finding those people that you have pre-approved or set up for purchasing struggling to find suitable properties to buy?
Oh, look, not necessarily. Look, I mean, normally when we're chatting to first home buyers or anyone looking to get pre-approval, they're picking a price point where they think they might land. And look, for a lot of the customers, they've actually been out there looking at properties already. So they've got a bit of a fair idea by the time they come and see one of the brokers here around where they're going to land with a purchase price. What we're finding is that the pre-approval timeframes are anywhere from sort of 3 to 6 weeks. So that's the timeframe where customers get their pre-approval. They're taking 3 to 6 weeks to find a house and go to contract.
3 to 6 weeks. That's a pretty quick turnaround still, huh?
Yeah, it is. Yeah. So, and that was 2 years ago. I mean, I don't have the stat right in front of me, but that would have been, I reckon, nearly 3 months. So it's sort of halved in the last 2 years, that pre-approval buying timeframe.
Are there any areas that buyers could look at to help them improve that approval time? Is there anything that you're seeing as far as what they need and what the struggles are, challenges?
Look, I mean, probably the major struggle still is, I would suggest, would be income, and borrowing capacity. But we are working with a lot of customers at the moment who have some personal debt, like credit cards and car loans. We're working with them on a plan to reduce some of that personal debt to help them improve their borrowing capacity. So, for example, like a credit card limit, they owe $10,000 on a credit card that might have a limit of $10,000. That's about 50 or 60 grand nearly that they can't borrow on a home loan. So, if they work on an arrangement to clear that off, then they might be able to get to the number that they need to get to be able to buy their first home, for example. So there's a lot of, I suppose, planning in the pipeline at the moment with some buyers, just to ensure that they, when we do apply for finance, we're not going to get an outright no, you can't do it, you decline. We're wanting to work with them to get the approval. Yeah,
nice. Are there any challenges you're facing from lenders around getting pre-approvals or finances through? I'm seeing a few more valuations coming through on properties that are going under contract, whereas 12 months ago was rarely seen.
Yeah, look, we're not really. I mean, lenders, some lenders don't do fully assess pre-approvals. That's probably the biggest struggle. And we're very careful with what lenders we go to for pre-approval, because if it's just an AI system doing a data scrape with some bank accounts and then issuing a pre-approval, it's not really a fully assessed pre-approval. So there are risks there that if a customer goes to auction or goes to a property, signs a contract, thinking they're unconditionally approved or they're approved to a point where they're really not, then we're seeing some customers, especially through the bank, if they've gone there directly, where they're getting let down at the end of their finance time frame. So that would be one area of I would sort of highlight with anyone looking to get pre-approval, is just making sure that you're getting the right advice, making sure that you're getting in front of a bank that actually does physically assess applications.
Yeah, absolutely. So what would your advice be to, looking forward to next year, if we do see 1 or 2 cash rate drops, maybe more, what would you be advising people to do now, whether they're a first home buyer or looking to upsize, downsize and refinance?
Make it your New Year's resolution. Come and have a chat with us. One of our brokers here, more so just to get across your numbers, which I think I've said in the past on these podcasts, is, I mean, the more you know about your numbers, the more comfortable you're going to be able to get yourself before going to contract. And I think it's super important that as the market's moving and shifting all the time, including obviously property prices, but also where the banks sit with their lending policies, it's good to get across that, know your numbers, understand what you can and can't do before you go out there into the market on weekends, for example, and going through 10 open homes. Get that pre-approval. It costs you nothing, and the brokers don't charge you anything at all. So it's a no-fee service, but to do that, do yourself some justice and actually come in and have a chat with us.
No, the numbers knows what's going on. Do you think it's better for a buyer to wait for a potential cash rate drop so they can improve their borrowing capacity, or to buy now and benefit from a rate cut drop when the rates go down and obviously give them a bit more money in their back pocket?
Yeah, look, I've always said, it's time in the market, not trying to time the market, in my opinion. So I think if you get in now, I mean, look, and if you're renting at the moment as well, rent prices are always increasing. I mean, there's no hidden secrets there. I think if you can get in now and be in the market for the next 6 to 12 months before you're waiting on a rate cut, you might pick up, 2 or 3% growth, for example. So you do the numbers on that and you think, okay, well, if the rates drop by 0.25%, that might give someone an extra $30,000 or $40,000 of borrowing capacity, for example. But if you can make that $20,000 or $30,000 now and also not be paying rent at the same time, you're paying off your own mortgage, you're actually going to be in a much better financial position, in my opinion, by that point in time. Yeah,
great advice. That's what I'd be telling people too. Mate, appreciate it. I know you've got to run into another appointment. Thank you for coming on the podcast this year.
No worries. Thanks for having me.
Hope you have a good Christmas. We'll be catching up soon.
Absolutely. We look forward to a Vietnamese curry soon, mate.
Yeah, absolutely. Have a good one, Cole. Cheers, mate.
You do. See you, mate.
Thanks.